Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosure pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both the positive and the negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. Like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen and can also be found on our website at crescat.net. Let's get started. I'm just going to have a 10-minute overview. We'll get over to Tavi for a bigger macro update, and then on to Quentin as usual for our activist metals updates and important information on the metals markets. So let's get started. What are we showing here? So at the first part of the year, coming into the year, so you can see there I've circled the end of last year. Believe it or not, the world was expecting 6 rate cuts. This is what was priced into the curve. 6 rate cuts coming into the year. There were some brokerage firms that were very vocal about this, very confident that we were going to see these rate cuts. Goldman Sachs was one of them. And Goldman Sachs apparently today has deferred their first cut now to September. They were holding out for June. Now they've just moved that to September. And look where we are today. Just one rate cut priced in now to the curve for 2024. What a crazy world! Just 5 months ago, the world was expecting 6 rate cuts. And this was the whole reason why everyone was so bullish on U.S. equities, and what's been the problem since then? Let's go on to the next. Well, the problem since then is that we've had entrenched inflation and interest rates have stayed higher. And so one of the problems that's going on is that we're, as you recall, more than a year ago, we started having bank failures because of rates being too high. Now there's very serious problems, continuing to happen in the commercial real estate industry, and this is the second largest. This is the second largest private commercial REIT. That Blackstone, the B REIT, was the largest. This one's called the S REIT. It's a Starwood Real Estate Income Trust that was founded around the same time as Blackstone's. Several years ago, when interest rates were let next to nothing, and investors were excited about the 5% or so yields that these commercial real estate funds offered. And so this is the second largest. The B REIT is the largest. These commercial and they're not just invested in office properties, by the way. These are industrial properties. There's homes. There's industrial and apartments. These are broad commercial real estate funds, and they are having trouble. This one is facing continued redemption pressure, and its lines of credit are running out. They've had to halt investor redemption. So there's a line to get money out of this fund, and the fund has had to put up gates. So this is I mentioned this because a number of or a few clients of ours and friends of ours who are in the commercial real estate industry are, and also run, similar commercial real estate projects, and they're really concerned about this. And there's definitely been a shift in sentiment towards, not just offices out there, but commercial real estate at large. Let's go on to the next. So what's the problem? Why have interest rates stayed higher? Why can't the Fed ease as everyone has hoped? Well, it's because the price, inflation remains entrenched. This is just looking at the price of everything that has to do with your car. Okay, insurance rates are up substantially, but since the pandemic, here's just one area of inflation of CPI that has become entrenched, and it's everything to do with your car. Anyway, I thought that was kind of an interesting chart. Let's go on to the next. So what we've seen is that supercore inflation, this is one thing that the Fed pays particular attention to. It has started rising again. And so coming into the beginning of the year, supercore inflation had been trending down, and the Fed thought that it was on track to continue trending down to get to that magical 2%, long-term inflation target that they have. Well, here we are, we're back up. It's trending back up again all year, and we're back close to 5% on supercore inflation. This is a major problem. This is the primary macro thesis that we have had at Crescat for several years now, and everything still points to the thesis of why we believe we are going into a new stagflationary environment, why rising inflation is entrenched, and how we're still in this bubble market for large cap growth stocks. This is the most speculative stock market environment that I have ever seen in my career. I think it's probably the most speculative market going back to 1929, and I'm talking about meme stocks, Magnificent Seven stocks, cryptocurrencies, and everyone believes that the Fed is going to be the best friend of markets and keep everything alive due to lower interest rates, and yet the Fed has had to keep rates super high, and this is causing problems, major problems, like bank failures that we had last year. So Barry Sternlicht, who runs Starwood, has been on CNBC and Bloomberg talking about how there's going to be more bank failures, and now the news story comes out from the Wall Street Journal this week about the S-REIT having problems, his Starwood S-REIT, and there you go. So we are, there are substantial problems in the market, and Tavi's going to have a great chart on economic versus surprises versus inflation surprises coming up here. But this is the problem. We see a stagflationary environment, and there's so much still to unfold because of this. Let's go on to the next, my final chart. 50 years of returns comparing gold to treasury bonds. Okay. What's going on here? We've been, for the last 40 years, until very recently, we've been in an environment where bonds have been strongly outperforming gold, and bonds had been the safe haven trade. Well, what this is showing, this is the breakout in gold relative to treasury bonds, showing, and it's funny because Tavi has a chart from probably a year and a half or 2 years ago where the Wall Street Journal had a headline, an article about, front page article about how gold was no longer a safe haven. And that literally, I think marked the bottom of gold relative to treasuries. And here we are now with gold breaking out on a 50-year chart relative to treasuries. Gold is the safe haven, we believe, not treasuries, especially now with the debt, the deficits, the entrenched inflationary pressures. And that's it for me. So let's go on to Tavi.
You're on mute. Right. There you go. Sorry. Just looking for the mute button. All right, guys. Well, thanks, Kevin. That was a great presentation. An interesting chart. I've not been on Twitter recently just because of the writing a letter, and I'm trying to just not see anybody else's research at the moment. I'm trying to come in with my own stuff. So, so that's a really good chart, actually. Really, really interesting stuff. Um, related to this, I think there's something. When I was just trying to sort of put into words what I think at least is the approach that we invest here at Crescat, and how we strategize things moving forward when we come up with ideas. And to me, it's always been about identifying big macro trends and trying to express those views in the markets the most asymmetric way as possible through parts of the market or segments of the market that look very inefficient and offer very mispriced opportunities relative to those economic shifts that we think are going to happen. And that got me thinking, what is that thing that is happening today that is likely to be that big trend that Crescat is looking forward to? And to me, it's this migration of capital towards hard assets. And especially because of the inflationary era, the trifecta of macro imbalances. And I would say that this view has been solidified recently, particularly when we had the Russian invasion into Ukraine, and we actually had a few countries starting to buy gold and accumulate gold in a large way, and China has been notably one of them. And you can see here this resurgence of gold. How did it happen? Gradually, then suddenly is sort of a way to describe. And you can see the U.S. Treasury's holdings have been declining. So it's sort of a way of them to improve the quality of their reserves by replacing treasuries with gold. And it's such an important and fundamental shift in how central banks have been behaving recently. And I would say that most of the U.S. close allies, the ECB and Japan and Canada and so forth, they have not done this yet this closely, I would say. Majority of this has been happening through countries like Saudi Arabia, Russia itself, and also China and other economies, and even emerging markets we've seen recently actually accumulating gold as of late. So what is the sort of Michael Lewis big short idea today? And it to me comes down to the devaluation of fiat currencies and the need for us to look for investments that kind of fall into two categories. It's the devaluation of fiat currencies relative to real assets that have a limited supply, but also imperative for society in two ways. Imperative for society because they're commodities, and we need them to power the global economy. And secondly, it really is a commodity or a metal that is used as sound money, which is what's happening here with gold. And so that sort of breaks down. And when I look at this chart, I mean, there's a lot of interpretations. One of them is what I've just presented here until now. And if you go to the next chart, this chart is certainly not necessarily the reason for somebody to think that China is the next economic power that we'll see replacing the U.S. and becoming all sorts of other things. Look, when we look at the monetary dilution happening in China today, it is drastically higher than even the U.S. And so I think that the imbalances that they're facing is actually what exacerbates their need for accumulating gold faster than other economies. And it's one of the main reasons what we're seeing that. I don't think that's necessarily why people like to say that they are playing chess and the U.S. is playing checkers. It's not necessarily what I think it's going on. Is I do think that they're in a much bigger need than the U.S. itself. And if you go to the next chart, because it's related to commodities, a lot of people think that China has the upper hand on commodities, and I think it's the other way around. And here's a great example. Bloomberg had some piece of news the other day looking at Latin America countries actually starting to impose tariffs in China on steel imports and other commodities they have been importing. And so those are big changes in the macro landscape when it comes to geopolitics that I think are important and relevant to pay attention to. And I'm old enough, if you go to the next chart, I'm old enough to remember Oh boy, I don't have the right chart actually, but anyways, I'm old enough to remember when China was supposed to be, surpassing the U.S. economy, and we haven't seen that happen yet. In fact, that ratio of U.S. versus China, it's actually only gotten worse in terms of the U.S. now is about 60% bigger than China in terms of an economy, and the GDP of China has basically gone sideways. That stagnation of their economy, which is to me a kind of a Japanification type of issue that we had in the 90s with Japan, is sort of to me what China is facing now, and monetary dilution will be a way to relieve some of those issues. So done with China. Let's go to the next chart. So you can see though that this monetary issue is happening across the globe. It's not just in China, but in the US recently, we're also seeing money supply actually starting to increase, which is a very not shocking because monetary base has been increasing, and so that basically was leading the way for money supply or credit to start also, or an inclusion of credit in money supply relative to monetary base, in which we're starting to see some of that expanding now as well. And remember, this is supposed to be one of the most one of the tightest monetary policies we've seen in history, and even with that, we're still seeing this further need of dilution of capital in order to alleviate some of the pressure in the economy, given this unsustainable move towards increasing interest rates and tightening monetary conditions in such a levered environment that we have in the US and other economies. Let's go to the next chart. And so now, Kevin was referring to this, and this is the headline that he was referring to in the Wall Street Journal, when not too long ago, in fact, it was September 2022, that the Wall Street Journal came out with this headline where it said gold loses its status as haven. And it's not shocking to see those things. That's what we call sentiment. You want to fade sentiment in a big way. I think there has been some sentiment shift even in some other commodities, which I'm going to point it out here in a minute. But gold itself is I don't think I've seen a time in history where gold has been making new highs and people have not shifted their views fully. I mean, and you can see this as I presented in the prior presentation, looking at the ETF funds in here in GLD, which is the most liquid ETF in the US or in the world, and still shows a 25% decline from its peak levels in terms of assets under management. So all those things are important here to consider as we navigate this, what we think it's going to be a secular bull market for gold. Let's go to the next chart. And so, one thing, this chart is courtesy of two people, I guess, organization Zero Hedge, and also Jonathan Frutcher, because he actually provided this to me as well. And I thought this was interesting because I've seen different quotes on this. The quote that I saw first, and I don't remember the name of the CEO, was actually speaking with Jim Cramer. And he claimed that ChatGPT uses 17 times more energy power than a Google search. And then I see this research that was shared by Zero Hedge, which unfortunately doesn't have source, and they claim it's 10 times. And if you look to, there's an interview from Robert Freeland not too long ago, maybe last week with Bloomberg, in which he also claims it's 33 times. So I don't know how many times it is, but it's a lot. And so if we're going to be using AI and this language models that we're seeing across all these developments that we're seeing across the internet space and AI space is certainly something to be concerned about. In fact, if you go to the next chart, Bank of America did a research as well, and the arrow and the 2x there is my iteration, but basically looking at the average household consumption of electricity, and then if we see all sorts of things going electric, vehicle charging, water heating, space cooling, and all sorts of things that we're seeing. So if we go all electric per household, we're going to see basically a double of consumption here. And this is not even mentioning AI and other data centers and all those things that we're seeing as well that could certainly add to this case. So what does that come down to? Well, let's go to the next chart. Interestingly, Chile is the Saudi Arabia of of copper when it comes, well, I should say what Saudi Arabia is for the oil industry, Chile is for the copper industry. And, they account for about 27% of copper production globally. So certainly is it's almost 1/3 of the entire production of the metal globally. And so you can see here that this decline in which we are retesting levels that we saw 12 years ago is something scary, and something to be worried about, especially when we see electricity demand surging now. I saw Andoran also, the oil trader, famous oil trader, which I have tremendous respect for the guy. I think he's made some really bold calls in the past and gotten those right. One of them being the oil prices going negative. I actually recall listening to him prior to oil prices turning negative, and he also claims that we may see some stupid numbers with copper. Stupid is my quote, but because I said that about gold, but that's I think that's very likely. And what we see in terms of the I think, and I hate to necessarily quote Bill Gates here, but he had a really good phrase at which he said, people tend to basically overestimate the short-term moves and really underestimate the long on the long run what is likely to the impacts that is likely to have in markets. And copper to me is a classic example of this, where we've gone from nobody talking about the metal to a surging prices, and now everyone wants to be an expert of why electricity consumption, why we're going to use copper and so forth. And here I am talking about copper too, but I promise I was I was in the line before. But go to the next chart. You can sort of see what's shocking to me is how do we fix this problem of supply? How do we adjust some of those issues? And here's a chart in which there's a catch to this chart. Basically, you're looking at metal prices, copper prices in this case, and you're looking at producers' capex, and now you're looking at metals and mining industry and capex adjusted by GDP. And you can see that there is a big divergence between the two. Now, you can also see that the white line seems to be a little bit ahead of the red line. Well, what does that mean? Well, that means that the copper price has a lead of 2 years. And so as metal prices rise, and there is a lagging effect in companies, mining companies, who start and spending money into new supply, new projects. And that's what we tend to see as we see them becoming more comfortable with a more sustainably higher metal prices overall environment. And so is this what we are today? Look, metal prices have been rising quite a lot already, and we haven't seen the producers really catch up. I would go out and say that maybe this might be the first time, or maybe in the 70s, we can perhaps something similar in terms of this lagging effect being more pronounced than prior years. I mean, yeah, we did see some level of lagging back in early 2000s. It's not shown in this chart because the copper prices, as I said, is already have a 2-year lead in this chart. So you have to adjust your brain to that. But basically, what I'm trying to say is, this seems to be different than prior times. I mean, this time, I hate to say the phrase, but this time feels like it's different because we're not seeing, and maybe it's ESG related and just approvals of new mines, but certainly we're not seeing it all. And I do think it's also the fact that investors have not deployed any money into the metals and mining industry. In fact, the overwhelming sentiment out there is that, yeah, gold, copper are going to rise and are going to do very well, but the miners are not. The miners are not going to. And I don't know where this is coming from. This is not backed by history, clearly. I don't think I've ever seen a time when you see metal prices having a run and that doesn't improve the margins of these companies. Yes, they are in a very complex and difficult industries to run and operate a business because they're always they're always dependent on metal prices in order to make money. And I do think that there are times and decades when you want to own these industries, and that's definitely now in my view because of the supply constraints that we have and all the demand side of things, and this migration of capital towards hard assets. So let's go to the next chart. And you can see here, copper prices just had one of the largest 2-day declines we've had in the history of the metal. That those are the things that the markets do to you. Don't chase a trend, a short-term trend like this, because it's usually what happens. The markets will sort of test your conviction and shake out people that don't have the same level of conviction as we do, because we've been deploying capital into copper related assets for a long time. And it's just part of the game to see that type of volatility at times when the metal is trying to really start a long-term trend. And I think that nothing changes in terms of the case and the thesis for copper itself. These types of declines should be welcomed by investors that foresee the opportunity here, which is the long-term opportunity of investing in the potential for copper prices going significantly higher from these levels. And so that's sort of the idea. Let's go to the next chart. And so you can see here copper miners versus gold miners, and a chart that I used last week. And you can see that the red line is the copper miners and the white line is the gold miners. And guess what? Recently, copper miners have been starting to do much better than the gold miners. And still, a lot of people think that the gold miners will never catch a bid. Well, history doesn't show that. Usually, not only they follow copper prices or copper miners, but also ultimately, if gold prices continue to move higher, and if we do see this accumulation of central banks with the metal, and along with other changes in 60-40 portfolios, Kevin just had a chart of gold outperforming treasuries. Does that ring a bell about owning gold as a defensive asset, perhaps? No, I think that more. Look, who reported this? It was Bloomberg. And so more and more, we're certainly seeing that the mainstream media is figuring this out. And ultimately, what it translates to, in my view, is that large pools of capital are going to start allocating money into gold. And it's, as I said last week, there was a good chart that Larry Lepard actually sent out not too long ago, in which he had this idea of how much bigger the gold market, including miners and gold and silver market cap and so forth, by looking at gold metals above ground, was a much more significant size of the economy than what it is today. And so, can we see something similar, even if it's double from what it is today? I would say that there's definitely enough macro reasons to believe that as we see things developing here in terms of the green revolution, the reshoring, the central banks accumulating of gold and 60-40 portfolios, and this migration to hard assets, ultimately should drive the metals and mining industry also to become much more relevant. So answering that question from the very beginning, where is Crescat really seeing this big opportunity? The metals and mining industry is probably the most inefficient type of market. Inefficient in the markets mean opportunity in our view. And so this is to us where we've been spending a lot of our time trying to understand where are the best opportunities in this market. So let's go to the next chart. And so you can see here the juniors and seniors are starting to break out potentially, and we're seeing this today again. I guess GDXJ is up slightly more than GDX. Notice that gold is down slightly today, and actually, if you look at GDX, is up about 120. So it's also interesting to see that in down days of gold, or when gold or the metal is down for the day, we're starting to see the miners reacting better. And so those are times that I pay close attention to, because I think that if people are okay taking the risk on down days on the metal on a daily basis, that means that they're starting to get more comfortable with the asymmetry that the miners offer. Let's go to the next chart. And so you can see it here, large hedge fund that is trying to raise money with roughly $5 billion, in which they are claiming that will allocate 15 to 20% into commodities. Look, pay attention to those things. I mean, those guys are basically leading what we are probably going to see 10 years from now, which is, most of these large institutions that have very significant mandates that take forever, and there's so much bureaucracy to go over the hurdle of making changes in their own mandates, will take a long time to make their own push towards commodities. And so until the time they do it, most of the hedge funds already made their move. So, I think this is quite timely and urgent type of environment to be looking into commodities, hard assets, and other things that might benefit from this transition of capital. Let's go to the next chart. And what Kevin was referring to, the chart that I was working on, is this economic versus inflation surprise index, which is interesting. It basically looks at data that came out relative to what was expected. And if it's more than what was expected, the line goes up. If it's less than was expected, then the line goes down. And so it breaks down into inflation in white, and red is the economy. And so you can see the economic data specifically has been coming down, has been coming out worse than expected. And so we're seeing negative surprise. In fact, this is a collapse in the data of the red line. I think it's the biggest, it's the lowest number since 2019 or so. And you can see that inflation is starting to increase. And I made the whole stagflation, I broke down into two, because Jay Powell said that he's not seeing the stag and not seeing deflation. Well, here it is in one chart. Hopefully this will get to his hands. Let's go to the next chart. And you can see that if you go back in not too long ago, the last time we saw these two lines diverging to the degree that we're seeing, it happened actually at the peak of the market in 2021, when we had the mega cap companies and some other technology companies, and we had a bunch of meme stocks. And that was a time when people said, do not short any meme stocks. And we had some short sellers going out of business. Now, that was the bell ringing, by the way, of the market at the very peak of 2021, if you recall. So look, yes, the white line was much higher than what it is today. I think what's the importance, but also the red line is lower. And so, I think what's important here is the fact that, we are seeing economic data coming out drastically below expectation, and inflation is proven to be quite sticky. And so that's the bottom line. And that usually, is a way of describing or defining a stagflation per se. Let's go to the next chart. And so here is Shanghai freight costs. It's something I've been paying close attention to. I've had a chart of this in the prior presentations, but this keeps developing. And we've had another big increase. If you look at the 2-week changes in freight costs in Shanghai, you're seeing one of the largest we've seen in history. If you go to the next chart, you can also see that the global freight cost has been increasing as well, because the Shanghai tends to lead global freight costs. These are all very inflationary trends, because think about how much goods the U.S. actually imports, and the type of impact we may see in those prices of those goods over time, given the fact that we're seeing potentially a second wave of freight costs rising. Those are things to be very much aware of. Let's go to the next chart. And so you're starting to see commodities, break out in different parts of the commodity space. The agricultural commodities is taking a break, and now we're seeing the metals. Those things, notice, these things rotate all the time, and we're seeing that again. Now, energy is sort of trying to make a comeback. Metals and mining are again hot, or metals are really hot right now. Most of the metals are rising significantly in the last month or two. And agricultural commodities that were the hot ones a month or two ago are now taking a break. And so guess what's going to happen? Well, they're going to keep rotating. And so when people start focusing on agriculture, the market starts focusing on metals. And that's what's probably going to be the case. And is it the end of energy? No, probably most likely energy will be the next one to rotate into. And so, I'm paying very close attention to all sorts of parts of the energy space, because I do think they've been sort of in a consolidating phase for a while, and they're probably likely to be the next ones to be moving as well. Let's go to the next chart. And just to finalize everything I said and sum up everything I said, is a chart that I've used in the past, and all credit goes to Increment AG and Roni Serfule and the guys from In Gold We Trust report. And they actually use this chart quite a lot in their reports. And I think, an investor should almost live by this chart and really think, the best way to express this opportunity in markets by looking at this. Because when I stumble into this chart, and a lot of people, when they look at this chart, people that are usually want to be skeptics, they say, well, Tavi, what makes you think that we're going to see another 10 years? Because we've been in the sideways lines for 10 years. Do you think we're going to see another 10 years? I don't think so. I think things ultimately revert to their mean. And, I'm a firm believer of that, and seeing those CapEx trends and all sorts of signs of the supply side of commodities being so constrained, makes me believe that this is probably near the end of this sideways move on commodities relative to equities. And have we seen most of the returns in equity markets for the next decade? I would think that if not, we're very close to it, because it's been sort of doing exceptionally well, and equity markets don't do that for too long. People start extrapolating things for too excessively, and that's when things get ahead of themselves. And maybe we're getting there with equity markets, and so makes me believe that I think we're very close to a pivotal moment here where this line starts to really move in the upward direction. I think this is my last chart, so I'm going to pass it on to Quentin. Yes, go ahead, Quentin.
All right, thanks, Tommy. Look, as we see things turn around in the mining space, excuse me, I think we're starting to see a bit of money come in, which is nice. I mean, it's not a tidal wave by any stretch, but we're seeing, the signs of money hitting this space. I talked a couple weeks ago, to the next slide. Talked a couple weeks ago about how money kind of trickles down through this whole mining sector. Usually it hits ETFs and large miners first, mid-tier miners and so forth, down to the junior miners, mainly explorers. But we're seeing some of that money actually come down to that level now. I'm not going to say it's a torrent by any means. It's not a torrent of money. It's not where we were, say, back in 2007, 8, and then on into 10, 11. We were seeing $1 billion a month during that period, especially 2010 and 11. $1 billion a month coming into junior financings. We're not anywhere close to that, but we are seeing at least some, okay, and that's good. We are seeing signs of life, and that means we got to get back to work here as an industry. All right, so go to the next slide. Talked a bit about how this is a couple of weeks ago. Talked a bit about how the rising tide lifts all boats, and you can see here it's lifting those ones way out at the edge of the water first, but soon it's going to raise these ones near to us, and those are the ones I want to talk about today. I'm actually going to talk about a handful of companies today that are kind of back in the saddle, that are going to be imminently working on their projects, including some incipient discoveries and so forth. I'm also going to give some updates on some that are actually already working, but I'm going to do this over a period of about 2 or 3 weeks. We're going to kind of rekindle some of our stories, some of the stories that we haven't heard about for a long time. Let's go to the next slide. Okay, so this week I thought I would start with these particular companies and kind of give a refresh. Talk about where they are with respect to their cash balance and ability to explore and the path forward. Okay, so this might be a bit of a long-winded dissertation on these junior mining companies. I hope people can be patient with me, but I just kind of want to get these back into people's minds. None of these companies have had earth-shattering news in the past week. These are not updates, but I have talked to most of these companies, say, within the past 2 weeks. Okay, so I've had discussions with their team, with their CEO, geologists, etc., and I kind of have a sense of where they're headed. Okay, so I thought it would be good to get that kind of message out and show that a lot of these companies are going to get back to work here, and that they can follow up on their discoveries, or tackle some of their high profile projects that I think could be new discoveries. Now, Condor Resources, I for about 2 years I have not been on the board. I was on the board back in 2020 and 2021. We had to make some changes here at Crescat, where due to the kind of the smaller size of the firm, it's difficult to manage compliance and stuff, but we now have a full compliance department and stuff, and that enables me to kind of jump back onto some boards, because I can work and we can structure things properly so that nobody's stepping on anybody's toes and stuff. Anyway, it's allowed me to jump back into Condor here recently. I'm delighted. I love working with Ever Marquez. I'm a good friend in Peru. He's the brains behind the exploration there. And I've also met with Chris Bunsick here recently, who's the new CEO. And I think that the company is going to be formulating some very strong plans. They've got a very good portfolio of projects. Putumayo is the one that they drilled late last year. Came up with interesting results, not necessarily a slam dunk discovery, but certainly interesting results that merit follow-up. Anyway, we are currently laying plans for how the company's going to tackle some of its other projects, but also redrill at Putumayo. So if the crystal ball shapes up like I think it will, we will see the company tackle another drill program at Putumayo, but perhaps also tackle drill programs on some of its other high quality projects. And one of them includes a very high grade silver story at Huayna Punta. And then I can see other projects like one of my favorites is Andrea, which is a high sulfidation gold system. I think we can see that advance towards the drill stage as well. And then don't forget, Teck has an agreement with Condor to option to earn in on the Cobre Orco project as well. Okay, so this company is starting to rekindle some life. I'm going to push like mad as a director, and we're going to try to get the thing going, back in the right direction. Not that it wasn't, but it was just idle. We'll call it that way. Okay, now Alpha. Look, Alpha did raise some cash not too long ago, I think about a month ago or so. And now they have plenty of money to go out and drill and follow up on the good gold results they've had at Aberna over the past year and a half or so. That's nice to see. I also know that a lot of pretty sophisticated investors were at site recently. I think that's good. That gives the company some visibility with some of the funds out there. So I think you're going to see some good news coming out of Alpha over the next 6 to 9 months as they start to resume drilling. Inflection Resources. I did talk to Alistair not too long ago, and it sounds like Anglo Gold is going to be pretty aggressive, especially with Duck Creek. I think they're going to drill test a lot of the targets that they defined with that tomographic survey that they did recently. And quite frankly, this is one where one morning we all might wake up and find out, they found the next Cadia or something like this, like a massive copper gold discovery. Okay, so I'm very keen to watch that one closely. Core assets, Nick and team are ready to get back in the field. I think they're actually mobilizing here shortly. I really think this could be an important year for the guys. I think they have some new approaches they're going to apply to drilling. I think they have a better understanding of the skarn and CRD system and its geometry. I think we're going to see some interesting results this year. I think they're going to test some new ideas. Let's see. We're going to go back over here to the left. Firefox. They have Agnico out there drilling like mad. I think they're doing basotil sampling on the Coho project. I guess it's pronounced, which is the Ernan property with Agnico. And I think it's so close to Rupert. It's such similar geology. Again, this could be one where we wake up one day and find out that there's a massive new discovery, and it's being made by the joint venture partner, the major company, spending their own money, which is nice to see. I did talk to Scott Berdall at Snowline here recently. I want to get a better handle on where they're going to be drilling this year, what they plan to do. And look, he was very excited. I don't think I've ever seen Scott so excited about testing some of these new targets. He talked about quite a few of them. I touched on those. I think there were 6 or so maybe in a news release a couple of weeks ago. I'd urge people to go back and review those. But I would not be surprised to see a first pass test on all of those reduced intrusive targets this year. But they are also going to go back up to the Ensign project. This is where Jupiter is located. So Jupiter, which was really the first bona fide discovery they had back in 2021. they're going to follow up on those phenomenal orogenic, high-grade orogenic, epizonal orogenic gold results. Okay, I think these guys could come out of there with proof that they're onto, say, a newfound gold type discovery there. They also have other targets in mind as well, which aren't as well known across the market. But I think I know them because I've been talking to Scott for years and years and years about these things. But I think there's going to be some other surprises come out of the Ensign too as they develop and bring some of the new targets to light amongst investors. And don't forget, they're going to drill Valley. They've got a pretty good program planned for Valley. I think at this point they will have, after this program, they'll have plenty of drill data to put together a resource. He's made it clear that he's not going to set a firm timeline on that. And I don't have a problem with it because it seems like anybody, sets a firm timeline on putting, saying, oh, we're going to release a resource on X date. It makes everybody fixate on that date rather than the real prize, which is, the drilling and the results that are coming in. It will come though, guys. They're doing the right thing. They're drilling some of the fringes and interior of the deposit at Valley where they need some infill data, and they will have a very robust outcome. Goliath, I talked to them about a week ago about their program. They're ready to go. I think their crew is starting to mobilize, in fact, and I would not be surprised to see an announcement saying they're starting to drill any day now. I do think they're going to attack those lower structures. These are there's the Sherbet structure, but then there's the Golden Gate and so forth below that, the Bonanza structure. I think they're going to tackle those pretty early in the program. That would be my guess. There were some really high-grade results out of those last year, and they also demonstrated the footprint of those structures is much more extensive than originally perceived. So I think they have some interesting targets that are going to be early in their program. And they also have done work, I believe they followed up on some geochem on that, the Lucky Shot porphyry target that's closer to Terrace. And I think we'll see some news out of that too, which is interesting. All right. Esque, the cruise, the company is talking about what their plans are for the summer. I do admire Mac for being conscientious about cash. He's done a good job saving cash. I think they have about 2.4 million in the bank, and that's really important. I don't want to say too much here, but I think there's some really, exciting events going to come in the not too distant future. Rackla Metals, they cashed up. They have, they're going to go in and tackle those targets. They have a number of reduced intrusions, but I think the peak in the adjoining targets, like that Cirque target that we talked about a few weeks ago, those look really good. Those pictures of those sheeted veins and stuff are just to die for. Those look like phenomenal targets to start drilling any day now. Okay, let's see. Let's go back over here to the lower left. Maronan Metals, they recently cashed up. Haven't talked about them for a little while. It's probably been a few weeks, maybe even a couple of months since I've talked about them. But they've done a fantastic job drilling particularly the upper part of the Maronan system. And they've had some really nice, strong silver lead values in the SEDEX part of the system there that they've clearly put together into a strong resource. So that resource announcement, which I think was about 3 or 4 weeks ago, looks very good. In fact, this is probably one of the best silver stories in Australia right now, and the market seems to be paying attention. Okay, the share price of Maronan has appreciated considerably over the past couple of weeks, and it's because it's coming to life. Silver's over $30 an ounce, and I think people in Australia who really love exploration are starting to take note of Maronan. PGX, don't forget they're fully cashed up. They have that exciting Sullivan type target in southern BC. The last I talked with John, he said that their permit would come in likely in June, which means they could be drilling, say, mid to late June with a bit of luck here. But that is one that I'm very anxious to see get drilled here in the short term. I think that could be just an amazing discovery if it turns out to be a Sullivan type zinc silver discovery. Western Alaska, they raised some money. They're back in the saddle. Their crew is very anxious to get going again. We're delighted to see them, their share price start to escalate, kind of like Maronin. People are taking note of these advanced silver stories, or I should say discovery level silver stories, and they're starting to actually give them value, considerable value. So Western Alaska, the share price has been up over the past few weeks, and I think it will continue to strengthen as the field season approaches. Because everybody knows if they go out there and they drill and they find the rest of the CRD system south of the Illinois Creek Fault, that could be a huge catalyst for a great result for them, share price increase for them. Okay, now Kingfisher Metals. This is one that I haven't talked about for ages, but Dustin has been working his tail off, putting together a new land package. I think I mentioned it maybe within the past 2 or 3 months, but I would urge everybody to have a refresh of Kingfisher Metals. Why? Because the company has effectively secured a very large land position in the Golden Triangle. It's more a bit towards the north or northern half of the Golden Triangle and a bit towards the east. So it's actually not far off the highway between Terrace and Stewart up there, which is nice. It's actually kind of road accessible or easier to access. But the collection of porphyries in this land package is to die for. I don't think I've seen a junior company with that many porphyry targets and in such close proximity with demonstrable grade and likely promising outcome. There's a lot of drill holes in some of them already that have really nice copper gold results. I think these guys are going to find the next Crystal Federettes. Okay, so if you want exposure to copper gold, I think these guys have it. All right, so that's just a bit of a blurb about some of the companies that I haven't talked so much about just because the news flow has been slow out of them here lately, but that are all on the tarmac ready to take off. Okay, these guys are on the runway. They're ready to take off, and they will have exciting, and they have money, so they have very exciting prospects for this year. Okay, all right, let's go to the next slide. Okay, this week results were a little bit skinny in terms of the number of drill intercepts we see, and it's usually typical at this time of year because there's not too many companies that drill in the spring. But there were 2 on the list here. This is out of the miner deck that comes out. I think they publish something weekly, if I remember right. Anyway, somebody sent me this, and I noticed Sitka and Altamira, 2 of our companies, are on here. And, I'm going to be talking about both of those here in a second. But, we are seeing, again, I would say we're past incipient discovery. Sitka is definitely a discovery. Altamira at this point definitely is discovery with this drill hole. All right, let's go to the next slide. Okay, I'm going to talk about Altamira first. So we're going to jump into updates. Altamira put out a really nice, really solid hole this week at Maria Bonita. This is the target that if you think back to when we first invested in Altamira, which was in 2021, was driven mainly by, there were 2 targets that I really like. Motum, which is at Apiakis. A lot of people think Motum is been forgotten about. It actually hasn't. They've been doing some work over there. I think they'll have some news on that over the not too distant future. But then over here at Cajuero, they have this Maria Bonita target, which is a big gold and soil anomaly that they've now drilled, and they've proven to the world that this is a new gold discovery. Okay, now this Cajuero project already had a resource of, I think, around 600,000 or 700,000 ounces at 1.2 gram, I think, somewhere in there. Not huge grades, but in Brazil, these kind of deposits make it. Okay, there's a lot of companies down in Brazil that are operating large open cast mines and doing quite well. In fact, Kinross, Paracatu, grades are less than half a gram in pit. Okay, but then you have other companies like our Brazilian friends there. Tavi, help me out. Aura Minerals, right? Correct?
Yeah, or a mineral. Yeah.
Okay. Aura Minerals have several mines operating in the kind of 1 gram or just under 1 gram range, but they're making good money. Okay. This is a place where you can operate deposits like this, and we know the metallurgy from Maria Bonita and Cajueiro is very favorable. It's amenable to large scale processing, mining and processing. Let's go to the next slide. Okay, so what attracted Altamira to this area in the first place was that white dash line there. You see, that is the gold in soil anomaly. But they did geophysics that then showed, hey, there's this funny anomalous magnetic low area, this blue, that also seems to be associated with this anomaly. Okay, so basically they drilled their holes within that zone, and I have a 3D model. I'm going to show it to you here in just a jiffy. But virtually all of the holes, not all of them, but pretty close to all of them in this footprint, have now come back with good results. Now, what is this target? Well, this is, in my view, it is a reduced intrusive target. So it's very similar in many respects to things we might see in the Yukon. Okay. The biggest difference is, though, this is a very old terrain. Okay. These rocks are Proterozoic in age. So they go back, they're a billion plus, we'll call it, years old. So these are pretty old rocks, sets them apart from stuff up in the Yukon by several 100 million years. But in spite of that, geology is almost identical. All right. Now, one of the things about these rocks being old is that this terrain has gone through a lot of tectonic activity over time. And in the past, I've described how when you get continents colliding and rocks interacting, they can get folded up almost like taffy. Okay, so one of the things, or one of the ways you should think of this, is a snowline type deposit that's probably been twisted and turned and folded and maybe strung out over a bigger footprint. Does that matter? Well, no, because it's probably a big gold system, but it is complicated. It's more complicated than, say, the Valley deposit. And I'll show you here in a minute what I mean. Go to the next slide. The rocks look like this. Okay, so this is an intrusive rock. I believe this is rhyolite in this case, maybe like a rhyolitic dome or something. But you can see the veining in there. They get the sheeted veining. So those gray features, that's quartz veining. The gold occurs apparently within, little tiny grains within the quartz veining. And there is at least appreciable, some visible gold. There's appreciable visible gold in these veins in places. And because of that, the company is going to do some photon assay work. Okay, I talked to Michael about this when the first results came out. I said, it's probably worth your time, because you're seeing particulate gold. It's probably worth your time to assay a hole or two by photon assay, just to see if that those nuggets of gold don't actually contribute more grade to this system. All right, so they're going to give that a go. They're going to actually ship up some samples from, I think, 2 core holes and try assaying using photon assay. We here at Crescat, we did invest in a photon assay company that's operating in North America. They were able to secure several Chrysos machines, and to be frank, anybody that's not using it here in North America is a fool, because the turnaround is so much quicker. I guess I'm giving a bit of an ad pitch here, sorry, but the turnaround is so much quicker, and the results are very, very solid. Why? Because Chrysos uses a 500 gram chart. The little canister that you use to analyze holds 500 grams of crushed material. Okay, so when you take the core, you don't have to crush it, pulverize it, and then take a 30-gram split or a 50-gram split, which is very small. Like 30 grams is like a tablespoon. Okay. You know, you can do 500 grams, which is a half a kilo. It's about a pound, a little over a pound, in fact, of material. And what that means is your representativity of those nuggets in your sample is better. It's, you know, it accounts for those nuggets, those little grains of gold that are present. So we'll see. Maybe they come back. We find out, hey, the grade's a bit higher than we thought originally. But anyway, it is. This is what the core looks like. Very low sulfide, very metallurgically friendly. Because of the low sulfide, you know, the cyanide should be able to attack this without too much complication and extract that gold. All right, let's go to the next slide. Okay, this is a cross section through the area they've drilled. And you remember how I said this is kind of chewed up like taffy or stirred up. Okay, you can see this isn't just one big blob. Okay, you can see it's probably a feature that went up and is now eroded at surface, but it's come back down into the ground. They see different rock types that are folded up, you know, rhyolites and other intrusive rocks as well. But it's the rock types that apparently control where the gold is. Okay, so they're starting to learn, hey, you know, there's certain rocks that host the higher grade gold here. And this is very, very revealing. I mean, it tells us a lot. It also shows us that the system is wide open. Okay, so now we have a profile here of about 200 meters vertical, at least, say, from surface down to depth. And it is open at depth. And we also we're starting to see some breadth to this thing. You know, it's in this image, it's about 200 or 300 meters, you know, wide in this cross section that's now defined by these drill holes. I'm now going to jump over and show you in 3D what is going on here. And let's see if I can do this without screwing up. Let's see, window. Here we go. For a viewer, hopefully that's showing. Is it?
Yes.
Thank you very much. All righty. Okay, so we're going to go to that image. Basically, this is the magnetics that we saw a couple slides back. But underneath here, you can see I got the drill holes. All right, so we're gonna look at this thing first. So they've drilled a footprint that's about like from this hole here all the way over to this. What is this hole over here? Is maybe 700 or 800 meters in that direction. And then from north to south, it's maybe 300 or 400 meters this way. Okay. So all of the drill holes that you see in this image fit in a box about 800 meters by 300 meters. That's a pretty big volume of rock. And they've tested it now down to about 200 meters depth. Okay. So we're talking about some pretty big tonnage, like tens of millions of tons within this image. Now, okay, the gold anomaly, as originally defined, was this thing right here. Okay, but what I found really interesting about these results, I'm going to turn the surface off here, and everybody that's watching YouTube, okay, you can play with this over the weekend. But this scale bar down here in the lower right is the scale bar. If I zoom in and out, you see how it changes. So you can kind of hold your mouth and measure things using that. Anyway, what I found very interesting. Oh, by the way, there's some holes that don't have assays yet, so we have some other news coming probably in the not too distant future. So hold your breath on those. So anything is blank is probably a hole to be assayed. But what we see is a pretty well-defined gold deposit emerging here. One of the things that caught my attention, though, is this hole right here, number 22, actually has some pretty high grades. From grassroots down, that suggests there might be something more going on back behind it to the south. Okay, so I think that's quite interesting. There might actually be more volume. There's nothing cutting it off in that direction. And then over here where we see the high grade, there's clearly a cluster about maybe 200 meters wide right in here where we're seeing high grades. And it looks like it has a plunge to the north. It looks like it's going down into the ground in this direction. So, you know, it could be that there's more to be found down in this location. And then way over here, this hole is very interesting as well. You can see a hole here, which has two big gold hits plus a high grade interval right there. Okay, it's hole 25. Okay, even though hole 19 didn't have a reportable assays like significant gold, this one does. Okay, so all of a sudden the system is, it's coming back to life over here. So it is a bit more complicated than say a valley type system, but in my view, it's still open in all directions. Like it's open to the south in that direction. It's certainly open to the west because of this hole. It's open to the north and then down plunge. Okay. So, they've done a good job starting to expand this. If I had to just kind of like, do an arm wave, I would say they probably have a few tens of millions of tons here that's grading, somewhere between zero 0.6 and 0.8 grams on average, weighted average, maybe something like that. People say, oh, that's not so high grade, but don't forget, this is all likely heap leachable stuff. And they already have 600,000 or 700,000 ounces not too far away. So, for the company to make this kind of progress with a very modest scale drill program is great to see. Don't forget, we started with 3 holes, I think, that had gold a year ago, and now we have a whole bunch in here. Okay, so watch this space. I think this thing will grow. That gold anomaly continues to the north. Don't forget that. All right. Let me see. I'm going to stop sharing there, and I'm going to go back to there. We are. Go to the next slide. Now I'm going to talk about Sitka. A lot of people email me about Sitka. They say, "Oh, that's a bit deep, isn't it?" No. I'm going to show you why this all works very clearly. I got a 3D model, and that's the beauty of what we do here at Crescat is we do the deep dive. We get the data from the news release and we put it into the computer. And we can say stuff that's intelligent about it. Okay. Now the headline hole here is actually 351 meters of 0.85 grams. Okay, so like in that gram meter table I showed a few slides back, that's a big intercept. It's like a 300 gram meter hole. Not bad. Resounding discovery hole. I mean, like they already had a discovery. Don't get me wrong. I'm just saying. There's no question when you hit a 300 gram meter hole, that's a winner. Okay. And that's actually pretty much in line with a lot of the drilling that Snowline has had. Okay. So I'm not saying this is exactly the same as Snowline, but I'm saying that in terms of reduced intrusive and the quality of mineralization they're hitting, this is looking pretty good. There's obviously some higher grade subintervals within this, 154 meters of nearly 1.5 gram gold, 37 at 3. 8 at 4.6. Those are great numbers. Great numbers. Let's go to the next slide. And they're focused along this intrusive, the granite intrusive that you see here. It's almost like a clothespin in a way because it branches out at the south end there into two dike-like features. But they drilled hole 158, number 58 that we're talking about now, about 70 meters north of hole 57, which they completed earlier in the season. Okay, that's really opened up things down here. But I'm going to show you in 3D just a second. You'll see what I mean. Go to the next slide. Okay, here's a cross-sectional view that includes hole 47. Hole 47 was really the first hole that they hit the higher grade mineralization last year. I think it was around September or October they announced that hole. And it really caught my attention because of the style of mineralization, the sheeted quartz veining. There are specks of visible gold like they see at Snowline, but it's also got that very interesting porphyritic granite where you see these big crystals of feldspar, white feldspar floating in a finer grain matrix. And to me, that smells like the tippy top of a much, much bigger, intrusive, and likely gold system that's associated with it. All right, so what we have here is hole 58 going much deeper than hole 47. In fact, each one of those lines, those horizontal lines, is 100 meters. Okay, so that's a big step. Okay, I mean, basically, we're looking at a high-grade system that has a profile of about 400 meters at this point. That's pretty cool. Okay, so you can imagine something that's 400 meters tall at least. Now, let's see what it's doing in and out of the section. Okay, go to the next slide. Okay, I forgot to have this one. This is a little 3D rendition showing holes 47, 57, and 58. And it's trying to give folks a sense of the spacing between all the holes, which I think is a fair way to portray this by the company. I think this is a good way to show things. So it's saying, hey, there's 200 meters between, the two holes that are deeper, so 57 and 58, and the upper hole, which is 47. And it's saying there's about 60 meters, I guess 60 meters horizontally between 57 and 58. That's interesting. It's good for the company to communicate that, but I'll show you the 3D model and put it in better context here. Go to the next slide. Okay, now the company did also inform us what their plans are. Okay, and I think this is really nice. The company drilled those holes, and they're sticking to the script. I will give the company that. They are doing what we asked them to do, test those 2 deep holes, and then now they're laying out plans for the rest of the summer. Okay, now I can see what they got going. So one of the things they're going to do is a big red oval there. They're going to chase the system that they have in holes 57, 58, and 47. They're going to chase it further to the south. I'll show you more about that in a second. But they're also going to start testing that area off to the east there that has a lot of really strong surface geochem expression, but hasn't really been drilled yet. Okay, you recall they drilled some holes here at Blackjack and Eiger back over the past 2 or 3 years. Came up with a resource, a very early inferred resource of about 1.3 million ounces. But now they're starting to fill in some of the holes. And I think that's really important because that area between, it's clear as a bell that they're going to all be connected at some level. Okay. But they've already, they're going to go ahead and tackle these targets to show that is the case. Go to the next slide. Okay. So they put in this map, which is really nice to see. Okay. This has a number of proposed holes, the blue holes, and it shows how they're going to test the continuation of that high grade area. They're going to chase it southward. Okay, now if you look at the scale of what we're dealing with, you can now see there's probably 500-600 meters of strike that they're going to test on that high grade area. Okay, this gives us something to dream about. All right, so imagine having 400 meters vertically. I showed you that a couple slides back. And now you got about 600 meters horizontally if these holes hit. Okay, and the high grade zone is 100, 150 meters wide. You can start to see that there's a good shot of finding a few tens of millions of ounces here, or a few tens of millions of tons here that might host a few million ounces. And that's a reasonable target. Okay, so this is starting to really crystallize in my mind. Like I can see where at the end of the season, I'm not saying they have a resource, but what I'm saying is they have enough space and breadth to their drilling that we should get a sense if they have a multi-million ounce target at hand here. Okay, let's see. I think I have to go now to screen share. Sorry. Window, blank, share. Okay, I got to go to Sitka. There we go. All right, so you can see this, correct?
Yep.
Okay. All right. So this red blob is the polygon of the resource. All right. So the first thing I'll point out is that this high grade that we're talking about is actually south of the resource. So everything in holes 47, 57, and 58 is not included with this resource. That's really important. You can also see that target they want to test over here. There's a few scant holes, but not really much. Okay, and I'll talk more about that in a minute. Anyway, we're going to look at this area that we know continues to the south here. These granite dikes that continue in this direction, because this is where they're going to test this year. All right, so we're going to click on the 3D model. We're going to get rid of that surface for just a jiffy, so we can see what the heck's going on. Okay, the first thing I'll do, I'll turn it on its side here. Again, the scale bar is way down here in the lower right. Look at this. There's Eiger over here, and this is Blackjack here, and then this is that saddle or connection zone or whatever they call it right here. Okay, I'm telling you, like these things are not forming from different systems. They're all connected somehow. At what level, I don't know yet, but I wouldn't be surprised to see as they drill more holes, say in here, And in here, there's, it's like play connect the dots. I think we're going to see a lot more connection between the system here. Now, where I'm going to take you right now is right here, okay, because that's the hole that just came back, hole 58. All right, so we're going to center the image on that. This is hole 57, by the way, and this is hole 58, and then this one up here is 47. Okay, so right now they've tagged a pretty high-grade feature down here, and it's wide open to the south. If I turn it around this way, there's nothing out here. Okay, so what they're going to do is they're going to drill holes in this area. Don't worry about these. These are in the foreground. Okay, but they're going to drill holes. Let me see if I turn it this way. So now we're looking west in this area to see if they can't chase this high-grade zone out in this direction. I think they'll also test it at shallower levels here, too. One of the thing people ask me, say, "Oh, isn't this kind of deep?" Well, guys, look, they haven't done any drilling up here yet, okay? Up here is still open as well. Okay, my hunch is we're going to see this high-grade zone extend to the south, and we're also going to see it extend and reach up closer to the surface, too. Okay, but it also connects with the rest of the blackjack zone, which is over here. This is not a bad thing. This is a good thing. In fact, just casting my eyeball, like if you had to start an open pit, this high grade is pretty much right at the surface. So you could drop a pit in here and grab that, but then you can start to step down and expand the pit. And I have a feeling we're going to have a bunch of high grade sitting right in here that will just pull the pit in that direction. Okay, so I see absolutely no problem whatsoever with this. They need to explore the absolute bejeebers out of this place and show that there's a whole bunch of ore right here. What really gets me stoked is the grade. Okay, this stuff that's that's highlighted here in the purples. Look at the grade bar over here. Okay, this shows you the grades of gold. Oh, it says snow line up there. I have to tell Kevin to fix that. Sorry. Should say Sitka. Anyway, it shows you the grades of gold that we have here. And these are really strong grades, guys. I mean, there's a lot of bulk underground mines, gold mines, that are mining 1.5 grams underground. Like the Goldex in Quebec and stuff. Push came to shove, and you had to mine it underground. You got enough width here. It's huge. So even that would work. So, look, in my view, those who don't appreciate Sitka yet will over time. I think Sitka is kind of where Snowline was in the early days. But I think over the course of this summer, as they drill more holes, especially in this area, okay, and if we see those high grades continue, people are going to be, come August, okay, my prediction is come August, people are going to be saying, wow, these guys might have 4 or 5 million ounces. Yep. And, I hope I'm the first to say it. So that's my 2 bets. But anyway, there's your high grade starter right there. They drop a pit there, and they keep dropping it down, and they start to grab this high grade down here, or else they bulk mine it underground. I don't care. Either way, this will work. Not worried. Okay, let's go back. All right, next slide. Okay, Brixton put out this news release, I think within the past week or so. It talks about their exploration programs at the Thorn property. This is way up in the northwest corner of British Columbia. It's outside of the Golden Triangle, actually. It's north of the Golden Triangle. And in these highlights, not only do they talk about drilling at Camp Creek, again, trying to focus on that higher grade core to the Camp Creek porphyry, they're going to test 3 new copper targets in this calendar season. Okay, so they've actually mobilized. They're out in the field. This is a good one to keep an eye on now that we know they're back to work. Back to work. That's our theme this week. Okay. And they're going to test some new targets, like the trifecta target, Cirque copper moly target, and the North copper target. And I haven't really talked about any of those for quite some time. Probably should do a rebrief of Brixton at some point here. But this is nice to see. They're back in the saddle. Copper's a great theme this year. And I think this could be good to have a very, very good year. Don't forget, BHP is a big backer. We're a big backer. This is a an exciting story. And they also have that work going on with Ivanhoe up in Montana as well. All right, go to the next slide. Hannon announced another porphyry. They've been having these, this porphyry exploration, this Previsto Central in kind of east or northeast Peru. This is over on the east side of the Andes. And they found yet another porphyry in this cluster. It's a bunch of Miocene age porphyries. What does that mean? Well, it's the same age as a lot of the big porphyries that we see up in, going on up into Ecuador, for example, like Solgold's porphyry and such like that. So, it has that smell. It's an alkaline porphyry. It's got the gold signature to it. It's got a pretty big footprint here. It sounds like the gold and copper numbers are extensive over 1 kilometer. Okay, and quite frankly, this is a walk-up drill test in my view. They do have a broad potassic anomaly, which means they're probably down into the core of the system. And that means they're erosionally, they're down in the sweet spot of the system. I'd like to see them drill these things. Dias are getting approved in Peru much quicker. I'm finding as I jump back into Condor that I'm, blessed with good news here, that the process for getting a dia is quicker these days. And I would expect Hannon's going to make a beeline. Tech, don't forget, is a big supporter of the company, as are we. All right, go to the next slide. And last but not least, Kuya Silver, I got to hand it to these guys. They have opened up Bethania once again, and they're producing ore. Okay, this is wonderful to see. You think about the struggles that these companies have gone through over the past 3 years or so, as the market's really been tough. Okay, and to see Bethania get funding, through, I think it was entirely through Trafigura, if I remember right. In fact, I think I see the guys from Trafigura next week here in Denver. So I'll ask, but they pulled it off. They pulled this off in one of the worst markets we've all seen in ages, and they're producing ore. Now this is going to be toll milled. Okay, so they're going to haul this material down to a toll mill, and they'll get their revenue by being paid for the metal contents or the products that are produced from these. But it's a cheap, easy way to bootstrap a mine here, and good on Kuya for pulling it off. All right, so I'll be anxious to see if the silver price is going up. A little story like this that looks like a small story could become a pretty meaningful story, and very, very, very quickly. All right, guys, that's it from my end.
All right, thanks, Quentin. So really, really great presentation today. Loved how you gave all the updates on so many of our companies, and it's exciting because it does seem like the money is starting to flow, and a number of our companies are now well funded ahead of this drill season coming up, and it's pretty exciting because we'll have some nice results coming out for the next several months here to come. And if you're interested in learning more about our strategies, we encourage you to reach out to Merrick. His information is on the screen right now. We have a lot of exciting things going on in the portfolio, and he can also tell you more about what we're doing. Tavi, any final comments?
No, it was great. Great presentation from Quentin as well. And it is interesting how things have been moving along quite nicely in the space. Capital is definitely flowing into slowly but surely, and the metals are definitely showing strength at the levels that they are. This wasn't really a short-term spike like we saw in the last 2 to 3 years. It's been much more of a sustainable move, and if that's the case, things can improve significantly, fundamentally speaking, for these companies. And so it is exciting to see that the thesis is starting to unfold. And I think this is just the beginning, if you ask me. But anyways, we'll be back next week with more. And but if you have any questions regarding Crescat and the funds and how we're invested, I would highly recommend you to speak with Merrick. The contact is in your screen right now, and you can see his phone number and email address. He would love to share more about Crescat with you. anyways, thank you very much. And we'll be back next week. And so see you then.